Hi, Xiaolin and Chef. Welcome to have you on the show again. There's a lot going on the financial markets, and there's also a lot going on in China. I think we're now something like 5 months down this tech crackdown, and I'm very happy to have you with me to give an update from your perspective where we are on China.
Well, it's our pleasure to be here, Jean-Paul. Thank you for having us.
Yeah. So where do we start? You know, you look at China every day. Most investors here look at China once in a while. We had the Baidu figures this morning. Looked pretty good. You know, not devastatingly bad. I think it was actually quite good. But from your perspective, what do you look at today, and what do you see in the markets?
It's an interesting year, holistically speaking, for China, capital markets. I think we met you every quarter ends or the beginning of the new quarter. I think each of the quarter we look back, the most headline news is centered around regulations, reforms. Some of them call them a tech crackdown situation happened this year. I think we don't deny there's a lot of events happening in China. But again, in our opinion, none of the events are meant for long-term of hurting the market. It's hard to feel that way. You know, you create volatilities, performance get put down together with it. And then, very naturally, if you say to clients, you look medium long-term, you look through the true reasons, intentions behind it, it's a hard one. Because the near-term performance is telling me I'm down 30%, I'm down 20%. It's a real, those performance number. But at the end of the day, our goal at KraneShares is really to see through exactly, because we recommend clients to hold it for medium term, really the 3 year to even longer 5-year horizon. But for that to happen, we've got to understand the near-term events, for instance, the regulation, antitrust, data security, all these things introduced in probably heavily more on Q2 than Q3, was really China to potentially removing these potential threats that for them to deliver a sustainable long-term growth. If you think about it, they're getting too big. They only get selective of who are the merchants they want to work with. They get exclusive, and the users has to use them because otherwise they have nowhere to get the same access. All those are not healthy in the long term in terms of competition, in terms of user friendly, in terms of creating a fair market. And then people would say, well, that fine, if all this is meant for long term, then why this year? Why all of a sudden all come at the same time?
It's a good question.
I think we shared, isn't it? We shared this with a couple of investors, and then we also debate internally among ourselves. I think this is maybe the year China has less pressure to deliver a nominal GDP number. Like, what's your GDP? Is it 8? Is it 7? Is it 6? Are you on 5? Are you on the lower single digit now? I think this is the year that most of the market would be forgiven for not having a good GDP number. And then perhaps the policymakers are using this as a window of opportunity to say, guys, we really have quite a lot of issues. This doesn't exist really just recently. It has been there. They got to deal with it. I do think they've been, well, hard to feel that way from an investor perspective, being smart to take this as a window opportunity to say, you know what, all these regulation, I have hinted it should happen. Earlier in March, they have been hinting it's too big, it got to be fair, it's long-term, it's sustainable. We hear those words in the MPC meeting in March, February, March. But now is the time, here you go, this is a policy, go and implement them. At the end of the day, if they use this opportunity to get all these introduced, got all those into place, they would have a window for these companies to adapt, for the economy to adjust, for the new pickup of resuming the economy pace to pick up in the direction they would desire to achieve. The other thing is, I think the 5-year plan, now we are in the middle, in the beginning towards the middle and towards achieving the 5-year plan, just in between the 5 year. And then next year, you're going to have quite important events. We'll touch base on that later. But then, you know, in this point, typically in the 5-year cycle, you have at the beginning of setting the directions, introducing the direction policies and so on and so forth. Go and do it in the 2, 3, 4, 5 years subsequently.
Right.
And let's see the results. I'm hopeful, sounded very obvious. We stay optimism on the development. But if you look long term, what the company has made a statement, like Alibaba, all these companies have made statements in the fine we paid, things is behind us. We're being adaptive. We are changing, we're accepting, we're adopting the policies. We're quickly changing our models, how we should do things. We adjust, we adopt. Those are the things you want to hear. The things you don't want to hear is fight back, you know, and then that's create chaos. Sorry, Jean-Paul, I paused there. I thought you might have a question.
No, exactly. That's what you want to hear. But as an outsider, it's so difficult to judge whether this was it or that there will be new things coming up. Because I saw, for example, around Singles Day, there was already competitors from Alibaba and JB complaining with the regulators to say, it's monopolistic behavior. So is it almost to an end, or will it continue? That's difficult to judge.
It's very, very fair question. We ask that ourselves. We wish we have a crystal ball to know what is coming. Between and I, you know what we do. China is our bread and butter. But we also get surprised by the scale of the announcement this year. If you ask me at the beginning of the year, do you expect some tough stance on policies and so on and so forth? We would say yes. But to the scale that we have seen thus far this year to date, no. Because we didn't expect it to be, for instance, on education, on some of the common prosperities, potential hurdles for the government, for the country to achieve that, to get removed so quickly, so rapidly. Did we expect that kind of pace? No. But given it's already happened for the sectors it get touched on, in our opinion, that has pretty much revealed the big threats that the government sees preventing them from achieving that common prosperity. In our opinion, it would have been done in the same amount, not in the same concentrated time frame, so focused in short period of time and say, there you go, this is my cards. We would expect the change would be as big as this over the time. It just feels to us, the scales, the time all reviewed, pretty much touched most of the sectors potentially would have some kind of impact. Is it all done? Hard to say. The March events, which is NPC meetings, we have this on page 9 in our deck, is, next year you have the national, People's Congress meeting. That's on page 9. Yeah.
Can we get it? Yeah.
Yeah, you get it there. There you go. So this is the meeting. What this meeting does is a meeting that setting all the government's agenda for the following year in part of the 5-year plan. So you would know where is the government focus on. I think market will read into it a lot more than before they would have. To be fair, in March, April, earlier this year, they have indicated the sectors that they would target on to work on. Market take less into it than they would or they should have. But this is happening in early March. I think this is also another way to sanity check. Are we done yet? Like to answer your question. But in our opinion, thus far to date, the events, the regulation, the policy, the industry, the aim for regulating has majority completed in our opinion.
Right. It's what they said, I think, by the end of July to say it's going to take 6 months. So if you add that up, then we should be almost done. We should be almost. But what has surprised me, indeed, they set these themes. I think they communicated quite clearly, perhaps not on the impact, but indeed on the sector. But then at the same time, we have the whole real estate discussion. Was that also mentioned in March? That was not part of this regulatory review, or was it?
It's not part of the regulatory review. You rightly observed it. I think Evergrande is, it's hard to see each event individually because it's all happening. It's all happening at the same time. The timing didn't give you the confidence to think they actually are isolated events rather than they are together, they group together. Evergrande is a whole lot different situation. Obviously, they have been managing the housing issues in China for a long time, right? In terms of second mortgage, in terms of put down, they don't want you to speculative on mortgage, they want you to use it, etc., etc. Evergrande, I'd say, is a company strategy failure rather than an industry impact from top down of impacting the industry. The reason I say that is during pandemic, obviously each business make their own strategy, rightly or wrong. They thought this is a brilliant opportunity to aggressively grab deals, lands, and real estate developments so that after pandemic, they would see an increasing demand of using such. So they have expanded so massively in that instance to even overstretch their cash flow. And when everything dragged on in China because of the pandemic, they see difficulties in managing their business. And then hence, there's a default happening. That being said, their overall situation, challenging situation they face is a lot less than would trigger the entire industry to fail. So I think given that the total amount is challenged, the strategy of that company doesn't represent the entire industry. It's not like 2008, it's almost the snowball of very few companies not involved. But in this instance, it's very few companies involved in the aggressive expansion they had. And on pandemic, I think it's still an ongoing issue everywhere. Even ours relaxing in the UK, I think there are still cautious voices been voicing everywhere in the public media. So it's in China. Their strategy is a very, very tough one. They want zero case in the entire community. For billions of people, that's a very hard target to achieve. It's almost impossible. Yeah. I agree with you. Their goal is to have 80% of the population vaccinated by end of the year. They really left a month and a half to deliver that. They are at 50+%. I'm calling my friends and relatives, it's how you're going to do that 30% of 1.4 billion people, in a month and a half. Apparently they roll out absolutely every corner, every possible base for that to happen. But again, I think, they have an ambitious of delivery for COVID to be managed or controlled under circumstances of neighbors are still, outbreak in that instance. But they do have very important events upcoming. In February, the Winter Olympics. There's almost no voice of saying this should be reconsidered. They are going ahead, and then they from the history, the last thing they want is to lose the reputation. So they're definitely going to host the event with the safety, with everything happening.
Even if it's without spectators.
Yes, I do hope they would keep their promise and then try their hard to get people vaccinated as much as they can. And then hosting the event really will help them to go back and connect with the rest of the world. That's one. Second, I doubt in the middle of international events where the domestic people have high personal attachments to, they have a very personal attachment to Olympics overall, to create market volatilities for investors to question them or taking a huge or tough stance on the country. And with the National Communist Party happening in March, the following month, to set agenda, I think typically you could expect this would be a bit of a quiet down, settling down period to a nicely normalization. In the last couple of weeks and months, we have been seeing our fund been normalizing, trying to find the bottom, which is an encouraging sign. It has a breakthrough back up, you know, the 50-day moving average, which technical level also shows some normalization. We also see the companies are delivering good results, though, you know, with the headline news, but they still delivering double digits, high double digits earnings, which I see is a sign of people finally realizing the earnings I've been dismissing for Q1, Q2, and Q3 is still producing strong earning numbers. And I think China will do more accommodative policies. And Jean-Paul, you remember this, regardless how challenged, how tough the global central bank been, you know, providing, supporting policies, China's central bank has been stayed away from it. You know, they learned the lesson hard way in 2015 when they have to deleverage. So now they're being very selective of what they do in financing. I think they have a lot of dry powder. If they need to stimulate the economy, they need to help the manufacturers. There are a lot of people in China are claiming if we continue the way we are continuing, the manufacturing, the real, you know, tangible business is going to suffer and will not recover. They hear those, you know, I think they hear those voices. They would have more power to do, though they did some RRR cut, the reserve requirement ratio is equivalent of a short-term liquidity injection. When you hear the RRR card, you can almost associate that with a bit of a, you know, the near short-term volatility injection, the near-term ones. So it's roughly about $1 trillion, $1 trillion RMB that they injected. This is somewhere around July's time, but they were very targeted. They say only the small, medium-sized enterprise can come and benefit from such. So I think they are realizing they are facing challenge with facing financial difficulties. They're targeting those. I'm not worried overall with the business. Someone are claiming, you know, your second quarter GDP, you know, less than what I expect, but they still 7.9% of GDP. I think there are policy to do.
It's indeed with this focus on smaller and medium large size companies. I would like to show this sheet from the presentation. Indeed, if we look at the KWEB companies, and this is the top 10, I believe. So you mentioned that before, that's enormous growth rates. It looks very good. Now, due to what happened, it's also attractive valuations, particularly if you compare it, for example, to American peers. But the question with this whole common prosperity and focus on small and medium companies is that these growth rates, will they be sustainable? Or will there be, every time this common prosperity, donate more to good doing and those kind of things? Or do you believe that the Chinese government will allow these kind of top companies to perform again? Because also, again, around Singles Day, you saw Alibaba, they delivered a record, but they also said, you know, be wise on what you spend, you know, don't spend it all on games and those kind of things. So is the growth rate of these companies sustainable, would you say?
I think, you know, it's really, when they donate, it's really the, you know, whatever they left after they grown and then what they decided to do. I think they become more conscious of donating to more and beneficial to the societies than before. You know, then you donate to a very famous university with $50 million, you know, what are you doing? Like, I remember the millionaire, the billionaire of China, the most rich man, he donated to a very famous university of $100 million and overseas, not to domestic, you know, local universities or whatever. And that there's a say of saying, you know, you should be more aware of what's going on locally, need more help. So I think at the end of the day, on the business side, all these names, they offer things that we use on a daily basis. Will they continue the grabbing the biggest market share like they would in the past. I think they would have to adapt a lot to make that more fair or more careful to lower tier city. I think the common prosperities doesn't necessarily equal to kill the rich. Is let's get rich together. That's what they aim to do. The getting rich together means your pocket getting more dollars, also means getting a better life quality. So for instance, some of the Pinduoduo, they didn't really, not say they don't mind, but they are targeting and focusing on, because that's the main consumer power in tier 1, tier 2 city, right? That's their main power. People in Beijing, people in Shanghai, they earn more, they ought to spend more. So they didn't bother to, not say bother, but a top priority to care the infrastructure in lower tier city, tier 2, tier 3, tier 4, the cities that are earning less income, but they also need help, particularly in pandemic when they can't shop in the traditional shop, they got to go online. But then because of the such initiative saying the whole society should benefit if you have such availabilities in Beijing, why it's not available in my hometown in Harbin, you know, because it's not convenient to use. The elder people doesn't understand. You don't have the infrastructure, you don't deliver. They still got to pick up by themselves. All those scrapped, all those changed. I think that's also one way means common prosperity, means I get access to what you would get access by you having lived in a higher income city than me, you know? So I think that's also one way of showing that. So you do see them by expanding or careful customer cares for lower tier cities, even other groups of people. So you see some of the statistics data, it's not in this stack we can share afterwards, is the lower tier city are become major and more dominant spending than the tier 1, tier 2 city, which is encouraging. That's also things that Xi Jinping, as a president of China, wants to see. He also meant for some legacies is he made the entire society richer altogether. I think the Communist Party's belief is let's get rich together, you know, and there's a threshold for it.
Oh, that's a good thing. And if I look at your product range, this year it has been expanded with the KSTAR as well.
Yes.
The technology stocks listed on the STAR market. That was almost perfect timing, I would say, because at the time when the KWEB went down, this KSTAR held up pretty well.
Yes. I mean, I'm glad you noticed the fund, Jean-Paul. It's a new fund. I agree. We launched them 26th of May, so in the middle of the year. The fund it's a very interesting one. These are the stocks really just in China onshore, means you do have to have some kind of quota to access. And by buying this fund, you get access to the onshore stock without doing all the hundreds of pages of paperwork. Believe me, that's not fun. The idea of the STAR board is a board under Shanghai Stock Exchange. So you think Shanghai Stock Exchange has a main board, and then STAR board is next to it. STAR stands for science and technology, so on and so forth. It's another board under Shanghai. This board was an initiative by Xi Jinping. I think he learned the license when 2018, the tech war, the trade war happened. He realized, or the whole policymaker realized, China is not ready for technology to be self-sufficient. They heavily relies on the suppliers, the peoples outside of China, the third party, in their opinion. If they want to develop or become the technology leaders, they short of semiconductor chips, all these things, they're not ready. So his big initiative back then, 1819, he made an announcement, I think in Shanghai, was let's be self-sufficient to deal with global uncertainties. I think that's very, very smart. And then there are people raising voice saying, we can be, we have a whole bunch of great names in China, but they just never had a venue possible to list locally. They have to go overseas. Like Alibaba, Jean-Paul, you follow China very, very closely. Alibaba could not possibly list in Shanghai back all the days. You know, they are running negative P&L. And then Shanghai would say, you're not qualified for listing. they have to go to New York. It was probably also by desire of their shareholders for whatever the reasons, but regardless what their preferences are, they can't list in Shanghai. So they have to go to New York, and they did. Those lessons are learned. And then Shanghai Stock Exchange saying, you know what, we should adopt our listing policy because we are not up to date. We are too conservative. And then let's learn what are the most representative listing policies for companies like Alibaba a few years ago, but back now we allow them to locally list it, and then adapt some changes in their listing governance. If you're running negative P&L, doesn't matter, but show me, are you doing your R&D as 50% of your contribution to your spending? Are you leaders in XYZ? So they update it to be more aligned with NASDAQ, for instance. And then they release that. So it's called a STAR board with the goal. If you are science, technology, breakthrough companies, you can list here.
Okay.
A very simple goal.
It sounds very interesting, particularly on that. It's exactly the areas where China wants to develop and has prioritized as strategic. So that's very interesting to look at it. Perhaps we can get a similar wave that we saw in NASDAQ and in the China CSI Internet Index. Yeah. So that's worth looking at it. So, and it's mainland China stocks. So are they then still considered A shares?
Yes, they are still considered as A shares. They relatively newly listed. They qualify for the startups stages. So if you think of them as Alibaba 8 years ago, these are the names along those lines, those status. Yeah. And they're very wide in terms of sectors of semiconductor, softwares, electrical equipment, chemicals, and all these things. You can think of them in the entire ecosystem for China to become technology leaders. So any companies along the lines that would qualify for listing here. And as you rightly pointed out, locally investors or even the governments and the regulators are calling the STAR market is China's own NASDAQ. So you have rightly compared them.
That gives immediately also the risk profile of these kind of investments. It's high risk, but it's very promising. So potentially you get high returns. And obviously, if people are interested, they go to KraneShares.eu and you can get all the information both about the KWEB and the KSTAR. And it's going to be difficult to make a choice where to put your money because there's so much going on in China. But I'm afraid in your story, you just hit one of my other points of slight worry on my list. And that is these listings of ADRs in the US. Because that is, to my extent, it's still pending what the US will do. There will obviously be regulation and disclosures. You don't have this crystal ball, but what is the latest from your perspective? Will we get an update before Christmas on what the US will do? Will they push Alibaba and the likes out over 3 years, or will it be softened?
I think it's a little working in progress. I say sometimes I feel it's 2 steps forward and 1 step back, and then sometimes you feel it's getting the right direction. For instance, when the Chinese regulator publicly said, CSRC, equivalent of SEC in China, publicly said, we do encourage the company listed in US to comply with the local listing laws. So that's almost a stamp check saying, if you got to produce your audit report, you got to do it, and then you have to do it. We felt that day was many steps forward. And then suddenly they say, okay, these are the few names is going to be on the list of no, and then boom, you feel step back. I think it's the finding the balance and the right steps and procedures for this to move forward. Either market would have the intentions to create unnecessary market chaos for Alibaba from China's perspective, from US perspective, that for the company's shares to be impacted because of the 2 countries finding the middle ground for them to list. I do agree there will be and have to be a resolution for it. There's a timeline. The clock, it has started ticking, There are companies are finding their own way to say, I'm not going to be in the middle of this. We're going to list it back. We're going to still list it in US. Then we have our ways to counterplay if there's a dramatic regulation impact rather than our company impact. We already seen a couple of actions like that from our fund. Our goal is the long-term healthiness of the company as an investment opportunity within the fund. That's one. Second, where they list is more of less impactful but unnecessary market event for our investors. If that means a change has to happen from an ADR to choose investing in an ADR to a Hong Kong listed stocks, we will do the Hong Kong listed stocks to be less surrounded and centered by the noise like that. We have not been proactively doing massive transitions, I'll be honest with you, but we have been increasing. I think if a year and a half ago, we have this conversation, I tell you exact, we have 9.8% in Hong Kong. The rest is in US. Today is over 25% in Hong Kong.
Right, you're already making that.
Exactly. There's some of the availability, some of the market volume is accommodative. We are, slowly, gradually getting to those stocks. We did some experiments and test, see if we got to do that. Will that impact of investor? Will that has any days of liquidity challenging? We have done that. That's zero impact to our investors. So we have been very pleased with how we have done it. If we monitor that very closely, you rightly said, we wouldn't know before the market knows or before the regulator announces it publicly.
Of course.
But if a shell happens, we won't just sit there still and let it happen. We have plans to mitigate.
Yeah, I think there's at least two sides to it. On one hand, if this story breaks, that there would be delistings. Well, I think amongst American investors, you'll definitely see selling pressure. It cannot be otherwise. On the other hand, there will be enough institutional investors like Charlie Munger buying Alibaba say, hey, this is a unique opportunity, so I jump in. But for smaller investors, for example, in the Netherlands, or perhaps it's also true in Europe, then your ETFs come in, because I try to buy BWD stock. But with a broker, I had to deposit a minimum of 15,000 euros in one share to do the trade. So I think local brokers are not so good connected to the Hong Kong Stock Exchange. And then it's obviously ideal with an ETF that is listed on the European market that you can easy access to these markets.
It's always the goal. I think it's also one you rightly pointed out. It's also one of the huge benefit and advantage by buying, China ETF, particularly on A shares or even the Hong Kong shares, is not only you saved hours and hours. I believe me, I've gone through as managing our international business. Part of my other job is to go through this paperwork and sign your name. So you do go through hundreds of pages. I'm not joking, for opening accounts, paperwork, getting quota to be ready for our firm. Obviously, we've done it, and then multiple times we know how to do it. But I would share the pain if it's individual investors to do it by themselves, by getting quota, by getting qualification, approval, so on and so forth. So the ETF, to be fair, on China, broadly speaking, offers quite a few things. One is very convenient. You buy one ETF, trade it UCITS, and then you get the access to entire A shares market or any part of China's market. That's one. Second, I think today the availability of the ETF that offers you very unique, and different investment offerings are also more enriched than a few years ago. Don't need to say long. 3 years ago, you wouldn't have this many, that short period of time. Today, like you were saying, how would I allocate between KWEB and KSTAR? It's a good problem to have. In the past, you have one, that's it, a beta play, do it or don't do it. Today, you have more choices, which I think can give the investors the unique access to what you want to allocate. Obviously, that's another thing. And then the trading cost, the availabilities of, our funds is available in US hour, Asia hour, European hours. So give clients pretty convenience to transit.
Yeah, that's very good. I have only one final topic on my list, but I think it's a very nice topic. I'm eager to hear if you have anything to fill me in on that. But in the last month, suddenly we saw Alibaba coming with the design of a 5 nanometer chip. Suddenly they were going into semiconductor chips. And I think also Tencent is also looking in this area. Will that be a new corridor of growth for these companies, that they also not only do cloud, but also become active in the semi industry?
I think this is a step towards to what the company meant by they will adapt. You know, adapt is one is when there's a policy, the current business model will adapt to meet the requirements, regulations, and policies. The adapt also means change. You know, for instance, you know, EDU, they out of business, but what are they going to do? You know, they still have the network, connect, resources, and so on and so forth. And also Alibaba is a bunch of leaders that have worked in overseas leading technology companies, you know, including Jack Ma himself. He worked in Yahoo, he worked in all these companies. They're very innovative oriented mind in the leadership of the company from top down. They don't want to be seen as just e-commerce platform, commerce platform selling stuff. They actually have you know them very well. They have very diversified business model in many sense, in music, in finance, in all these things. I wouldn't be surprised if the next thing they will go into is along the green economy side. The green means electrical vehicles, future mobilities, chips business, and also the areas where they see government want to provide support and aim for the company to be. Remember we mentioned KSTAR, the STAR names. Those are names like in semiconductors, and the semiconductors companies listed on STAR board get 10 years of tax exempt.
Wow.
So if you do semiconductor, you're focusing on producing those things, then you make China become a, you know, really maker rather than just assembling things. Then we will support you in tax, in anything else, and funding. Then just go and do it. I wouldn't be surprised that Alibaba will step more toes into green investing and the technology front, which, if you remember, the 5-year goal of China was really that's the key. Technology, green, climate, all those are really their top priority. So it's actually a good development to see they are looking for a change or a broadening directions.
Yeah, for those kinds of things. You know, by the way, that we had Jack Ma over here in the Netherlands.
I know he was having a holiday, wasn't he?
No. He was looking into, well, perhaps it felt like a holiday to him, but he was visiting all kind of agricultural tech firms to do some sort of study trip. There were some people say, "Oh, hey, that's Jack Ma." That's funny. You see the pictures, and obviously they're all taking pictures. And,
right.
Spread. So he's still alive. He's still alive, at least.
Yes, he is. He is. I think he's looking for the next adventure. I think he has the resource, the network, and the vision. And he's young. You know, he's. I wouldn't be surprised if something else even nicer come up.
Yeah. Okay. Very good. Is there anything you would like to add?
I think, you know, for you and for your audience, obviously, is very educated with this asset class, particularly in China. I think, obviously, this year's volatility is a little bit of a crowded, if we may say. But I think our investor has showed extremely high level of disciplines to believe this is a long-term asset class for their portfolios. In a tough year like this, in the macro stance, not the fundamental, because we do see good earnings. We see investors are, stay very strong in believing in the asset class. We see good amount of flows into our funds, into our strategies, also in US. So we do experience a holistic of inflows to the strategy. So I just say near-term volatility is painful to see through, but when you can see a longer term and for the horizon of your portfolio, we do believe long term you will gain, the growth you deserve to grow, and the companies will produce.
Right. And longer term, that is, I'm just scrolling back. That's this one. Huh?
This is the one. This is the MSCI
it's
China.
been going on for 10 years and more. A huge outperformance, but indeed, as you rightly say, a lot of volatility. And that's what you have to bear in mind when investing in China. Because on one hand, it's the second largest economy of the world, and perhaps at some point the first. And in some other areas, it's still developing, right?
Yes.
I think that is it. And with development, that comes with some hiccups here and there. Yeah. So,
well said.
Chef, is there anything you would like to add?
It certainly is. I think that obviously, if investors are interested, they can go and follow the blog of our CIO, Brendan Ahern, free of charge. They can subscribe to that at www.chinalastnight.com. And I think a lot of the topics that Xiaolin spoke about today, are addressed in that blog. So it's not on our website, but it's a separate site. So it's real, it's pure informational. So I think it's worth for people to check that out. There's you can subscribe to it and receive the blog on a daily or a weekly basis, depending on how frequently you want to be updated. And also, I think, we mentioned KSTAR and KWEB, and as there's no overlap between the stocks that are in the KSTAR ETF and KWEB, we think it's actually a very good combination. The combination is very powerful. And as Xiaolin mentioned, that some of these firms like Alibaba and Tencent, they're already, conglomerates like the FANG stocks in the United States, whereas some of the names that are in the KSTAR ETF are younger and still have that enormous growth potential. So you can effectively get in an earlier stage. So I think it's worth doing that. And again,
considering and doing research.
Yeah, and the funds are all registered here in the Netherlands. We have what's called a key investor document. And again, if anybody has any specific questions, they're always welcome to email us at europe@KraneShares.com.
Right, that's a good addition, and I'll make sure I put that down in words as well. So then I would like to thank you both a lot for being on the show here again. We know that a lot will happen before we meet again, but let's see how we touch base if we do this again in the course of next year. Thanks a lot, and a lot of success with your business.
Thank you, Jean-Paul. Thank you for having us.
Dankjewel.